Hey, hi everyone. This is Professor C.S. Solanki this side. I hope you people are doing good. Things are good at my end also. I know I am a little bit late from last lecture to this lecture. पर देर से आया हूँ, दुरुस्त आया हूँ. Day 5 discussion with respect to the answers to the case scenario based questions and the MCQ booklet issued by ICI applicable for May and November 2021 examination. Day 5. Now see, to last lecture, we have discussed MCQs till 40 questions, and with respect to case scenario, 1 to 20 questions are done. From 21 to 25 case scenario, that means only 5 questions are left. So in today's lecture, we are not going to discuss any of the case scenario. First, let us cover the MCQ questions because there are 100 MCQs. So in the next part, I will be taking the remaining 5 case scenario questions. But in this part, I am going to take MCQ questions from question number 41 till question number 70. Okay, so without wasting the time, let us start with the question number 41. Question, if you look at Mr. Mayank has received a sum of rupees 75,000 on 24th of October 2020 from his friend on the occasion of his marriage anniversary. What would be the taxability of the said sum in the hands of Mr. Mayank? So if you know, the receipt on the occasion of marriage is exempt from the tax, but receipt on the occasion of marriage anniversary is not exempt from tax. And since the receipt is exceeding rupees 50,000, okay, so it will be taxable in the hands of Mayank. Entire 75,000 is chargeable to tax. Reference is 56. Okay, now next question, question 42. If the converted property is subsequently partition among the members of the family, the income derived from such converted property as is received by the spouse of the transferor will be taxable. This question is with respect to clubbing topic. Clubbing topic, there is one concept called as partition of the property. Now, after the partition of the property, if the property is transferred to the spouse of the assessee, then it will not be taxable in the hands of spouse. It will be taxable in the hands of the transferor of the spouse. So it will be taxable as the income of the spouse of the transferor. Okay. Next question, question number 43. Mr. Arav gifted a house property valued at rupees 50 lakh to his wife, Geeta, who in turn has gifted the same to her daughter-in-law. So Arav has gifted to wife, and wife in turn gifted to Geeta. Okay. Who in turn has gifted the same to her daughter-in-law, Deepa. The house was let out for 25,000 per month throughout the previous year 2021. Compute the income from house property for assessment at 21-22. So let us first compute that house property income. 25,000 multiply by 12. If you will do, you will get the answer of 3 lakh. But 30% standard deduction is there. So 30% standard deduction, the answer is 25,000. Compute the income from the house property. In whose hands is the income from house property chargeable to tax? Now see, the asset is transferred to the spouse, and the spouse has transferred that asset to the son's wife. Okay, so it will be taxable in this hand, but this house property was transferred by husband to his wife. Okay, so according to the deeming provision, deemed ownership, this house property rent will be taxable in the hands of Mr. R. So 2,10,000 in the hands of Mr. R will be the tax. Okay. Let us move to next question. Question number 44. 15% debentures of Reliance Limited of 500 each. Annual interest of 37,500 was declared on these debentures for previous year 2021. He transferred interest income to his friend Shyam without transferring the ownership of this debenture. Okay, this is also a concept with respect to clubbing. In clubbing, there is one concept called as transfer of income without the transferring of the assets. transfer of income without transferring of the asset. Okay, that means what? In lecture, I gave you the example of Mr. A and Mr. B. Mr. B's son is a brilliant student, but Mr. B can't afford his studies expenditure. So what Mr. A does, the FD on Mr. A's name in the bank of SBI, okay, and Mr. A instructed to the SBI bank that whatever may be the interest that accrue in my name on this FD, that interest should be transferred to Mr. B. Now remember, the interest is transferred to Mr. B. It does not mean that Mr. B's son, sorry, the interest is transferred to Mr. B's sons. This does not mean that the interest is earned by his son. This interest will continue to be taxable in the hands of Mr. A. So similar transaction is over here also. While filing the return of income for assessment year 21-22, Shyam showed 37,500 as income. So Shyam has shown this debenture income. As a tax advisor of Shyam, do you agree with the tax treatment done by Shyam in his return? So answer will be what? What answer will take over here? So we'll say that the treatment is not correct. No, the treatment Shyam has no, since the Ram has not transferred the debenture to Shyam, the interest income of the debenture is not taxable the income of Shyam. Okay, so answer will be actually it is taxable in whose hands? It is taxable in the hands of Mr. Ram. Okay, let us move to the next one. 45. Ms. Shivani, the wife of Ms. Anurag, is a partner in a firm. So Mrs. Shivani is a wife of Mr. Anurag, is a partnership firm. Her capital contribution of 5 lakh to the firm as on 1/4/2020 include 3.5 lakh contributed out of a gift received from Anurag. So the gift invested by spouse or gift invested by any other person. Okay. If you have received the gift and that is invested as a capital into the some other's business, then for the particular share of profit or share of loss, you are liable. If there is a loss, you will get a set off of it, and if there is a profit, that profit will be taxable in your hand to the extent of your share in the opening capital. So here 5 lakh is the opening capital, in which the 3.5 lakh is a capital which is contributed by Mr. Anurag. How it is contributed? Mrs. Shivani, that he gifted to Mrs. Shivani, and Mrs. Shivani has invested it into the partnership firm. The firm paid interest on capital of 50,000 and the share of profit of 60,000 during the financial year 2020. Entire interest has been allowed as deduction in the hands of the firm. Which of the following statement is correct? Now let us first say this scenario. The firm has given capital of 50,000 rupees. Now out of this 50,000, two part we have to do. 50,000 multiplied by 3,50,000 divided by 5 lakh. 50,000 multiplied by 3,50,000 divided by 5 lakh. If you will do, you will get the answer of 35,000. It shall be taxable in the hands of Mr. Anurag. The balance will be taxable in the hands of Mrs. Shivani. Okay, now don't talk about this profit. The profit received by partner from a partnership firm is exempt under section 10(2)(a). Anyway, the profit amount is not relevant for us because that profit will not get clubbed any of the hands. It will not be taxable. Why? Because the partnership firm has already paid the tax on this income, right? So 35,000 will be taxable. Now let us see the case over here. The profit is exempt. Point number C, if you will see, the profit is exempt, but the interest of 35,000 is includable in the hands of income of Mr. Anurag, and the interest of 15,000 is includable in the income of Mrs. Shivani. Right? Let us move to the next question. Question number 46. Mr. Arvind gifted a house property to his wife Tina and a flat to his daughter-in-law. Arvind has given two assets, one to his wife and one to the daughter-in-law, that is son's wife, Miss Sita. Both the properties were let out. Which of the following statement is correct? Which of the following statement is correct? Mr. Arvind gifted a house property to his wife and Miss Meena and a flat to his daughter-in-law. So house property is given to his wife and a flat to his daughter-in-law. Okay. Point number one is income derived from both the properties to be included in the ends of Mr. Arvind by virtue of section 64. No. Income from property gifted to wife alone is to be included in Mr. Arvind's ends by virtue of section 64. Answer is no. Mr. Arvind is a deemed owner of the house property gifted to Miss Meena and Miss Sita. Okay. This is also not correct. Mr. Arvind is a deemed owner of the property gifted to Miss Meena and income from property gifted to Miss Sita would be included in his end by virtue of section 64. Because as per section 27, Mr. Arvind over here in this case will be considered to be as a deemed owner, and as per section 64 of a clubbing, okay, 64 subsection 1 of clubbing, this amount will be taxable. The amount received by Miss Sita, but it will be taxable in the hands of Mr. Arvind. Okay, now let us move to the next one. That is question number 47. I hope you are getting the answers. You are getting a click of the answers why this answer has been ticked. Okay. If you have any doubt, any query, you can write in the comment box. I will definitely answer your queries. Question number 47. On 20th October 2020, Pihu, a minor child, gets a gift of 20 lakh from her father's friend. On the same day, the amount is deposited as a fixed deposit in Pihu's bank account. On the said deposit, the interest of 13,000 was earned during the previous year 2021. In whose hands the income of Pihu shall be taxable? Also compute the amount of income that shall be taxable. First of all, let me tell you the section number 64(1)(a). Section number 64(1)(a). The minor child income is taxable in the hands of parents. In the hands of parents whose income is higher other than the income of a minor child. Okay, that means mother or father. In three cases, the income is not taxable in the hands of parents. That means income is not clubbed in the hands of parents. Case number one, if the income earned by a minor child due to his skill or talent. Okay. If the income is earned due to the manual activity of a minor child and income is earned by a minor child who is handicapped, okay, then in these three cases, the income will not be clubbed in the hands of parents. Okay. None of the three conditions are over here. So this 13,000 will be clubbed in the hands of parents. However, as per section 1032, you will get an exemption of 1,500 per minor child. 13,000 minus 1,500. 13,000 minus 1,500. Answer will be 11,500 will be taxable in the hands of who? In the hands of Mr. In the hands of his father, Pihu's father. Okay. Now, if somebody calculate like this, then it will be a wrong. Okay? Remember, this is not just Pihu has received one more thing. That is what this 20 lakh rupees. This 20 lakh also is a what gift. Okay, so the calculation will be like this: 20 lakh rupees is the gift. The 13,000 is interest income. 20 lakh 13,000 will be the total minus 1,500. 20 lakh 13,000 minus 1,500 will amount to 20 lakh 11,500. This will be taxable in the hands of Pihu's father. That means answer is the correct option. So no, by just reading the first option you can't conclude. Why? As I told you, section 64(1)(a) states that the income of a minor child will be taxed in the hands of parents whose income is higher other than the income of child. So we have to see the other options also, and the option C is given. Income of 20 lakh 11,500 shall be taxable in the hands of Piyu's father or mother whose income before clubbing is high. Okay. Mr. A, question number 48. Mr. A incurred short-term capital loss of 10,000 on a sale of shares to the National Stock Exchange. Such loss, what will what we will be doing with this loss? This loss can be set off against what? If you remember, short-term capital loss can be set off against short-term as well as long-term capital gain. But the long-term capital loss can be set off only and only against the long-term capital gains. It can be set off only against the short-term capital gain. Answer is no. Can be set off against both the short-term capital gain and long-term capital gain. Answer is this. Yes. Okay. Next question. Question number 49. According to section 80, no loss which has not been determined in pursuance of a return filed in accordance with the provision of section 139(3) shall be carried forward. The exception to this are, now listen very carefully. Section 80 states that if there is loss in a particular head, then that loss is allowed to be carried forward only if the return of loss is filed section 139(3) within the due date which is specified under section 131. That means you have to file the return of income on time. If you do not file the return of income on time, the setting of the losses is allowed, but the carry forward of losses are not allowed. However, in two cases carry forward is allowed. Case number 1, house property losses are allowed to be carried forward, and case number 2, unabsorbed depreciation under section 32 is allowed to be carried forward. Okay, so first answer, loss from the specified business under section 73A. No, this is not the exception. Loss under that capital gain and unabsorbed depreciation can be carried forward under section 32. No, this is not the exception. Loss from house property and the unabsorbed depreciation carried forward under section 32. Yes, this is the exception. Okay. I hope you are getting this. Question number 50. Forward loss from house property 3,10,000 for assessment year 2021 is allowed to be set off against the income from the house property of assessment year 21-22 of rupees 5 lakh to the extent of, see, the income is of house property, and the loss is also of house property. Okay, and one particular head loss is set off in the next carried forward years only in that respective heads, and there is no restriction to that amount. So 5 lakh income is there and 3,10,000 loss is there, so it will be set off to the extent of what? 3,10,000 rupees. There is no restriction with respect to it. Of course, there is a restriction with respect to house property loss, but that is with respect to inter head adjustment. Means if you are setting up the losses of the house property with respect to your business income or your salary income, then in that particular year you can set up the loss maximum up to rupees 2 lakh, maximum up to rupees 2 lakh. But with respect to intra-head adjustment, okay, let us move to the next question. Question number 51. Mr. Rohan incurred a loss of rupees 3 lakh in the previous year 2021 in a retail trade business. Against which of the following income during the same year can be set off such losses? 3 lakh rupees loss, and that is also the retail trade. Let me tell you, with respect to this loss, this is a normal business loss. This is a normal business loss. Normal business loss can be adjusted against any income except the salary income. Except the salary income or the winning income. Okay, loss can be set off against the winning income, and business loss can be set off against salary income. Okay, so let us see it. Profit of rupees 1 lakh from the wholesale cloth business. Long-term capital gain of 1.5 lakh on sale of land. Speculative business income of 40,000. All of the above. Answer is D. All of the above. Why? The restriction of salary is only there and winning income is only there, but these restrictions are not applicable in this given options. So in each and every case, this loss can be set off. Question number 52. runs a business of manufacturing of shoes since the previous year 1819. During the previous year 1819 and previous year 1920, Virat had incurred a business losses. For the previous year 2021, he earned business profit computed of 3 lakhs. Considering that he may or may not have a sufficient business income to set off his earlier losses, which of the following order of set off shall be considered? He does not have any income from any other sources. Now see, in the year 18 was having the losses. In previous 19 also he was having the losses. But if you remember, if you are having a loss in a particular year, and if that losses are carried forward to the next year, then it is about to be carried forward only for the 8 years in case of normal business and 4 years in case of speculative business. So obviously you will set off first that loss which is going to last first. Okay, that means the loss which is going to be lapsed first, that is to be adjusted first. So previous year 1819 loss will going to be lapsed first. That means 8 years of previous year 1819 will come first. So we will first set off the loss for the previous year 1819, and then we will set off the loss for the previous year 1920. So let us see now. And of course depreciation and other losses are there. So first you have to make adjustment for the current year depreciation, then the business losses, and then the unabsorbed depreciation. So there is no unabsorbed depreciation. So let us see first. First adjustment of loss of previous year 1819, the loss of previous year 1920, and the unabsorbed depreciation, if any. Yes, this is the correct answer. We are not supposed to see the other answers. Okay. Question number 53. Mr. Ravi incurred a loss of rupees 4 lakh in the previous year 2021 in leather business. Against which of the following income earned during the same year can be set off such losses? So leather business loss can be set off against any income except the salary. Okay, so profit of rupees 1 lakh from the apparel business, long term capital gain of rupees 2 lakh on the sale of jewelry. Yes, इस पे भी set off होगा, इस पे भी set off होगा. This income also it can be set off. This income also it can be set off. Salary income of rupees 1 lakh, no, the business loss is not allowed to be set off against salary income. So what are the options that we have to see? Profit of 1 lakh apparel business, long term capital gain of 2 lakh, 4 minus 1 minus 2, 4 minus 1. First from 2 and thereafter 1, and the remaining loss has to be carried forward. No, first from 1 and thereafter 2 and 3. 3 is not allowed, salary income is there. First is 1 and thereafter from 3, the remaining loss has to be carried forward. No, correct answer. First from 1 and thereafter from 2, and the remaining loss has to be carried forward. If the remaining loss is there, then it is carried forward. So correct answer will be what? D, right? Move to the next question. Question number 54. During the assessment year 2021, Mr. A had loss of rupees 8 lakh under the head income from house property, which could not be set off against any other head of income as per the provision of section 71. The date filing of return of section 139(1) in case of Mr. A has already expired, and Mr. A forgot to file his return of income within the said due date. However, Mr. A filed his belated return of income for assessment year 2021. Now, while filing the return of income for assessment year 21-22, Mr. A wishes to set off the said loss against the income from house property for assessment year for previous year 2021, that is relevant to assessment year 21-22. Determine whether Mr. A can claim the set off. Yes, because as discussed earlier, just above question we have discussed that unabsorbed depreciation as well as the house property losses can be carried forward even if the return of income is filed late. Okay, so yes, Mr. A can claim the set off of loss of rupees 2 lakh out of 8 lakhs from its income from house property during assessment year 21-22, if any, and the balance has to be carried forward to assessment year 22-23. No, this is not actually correct. Correct option will be D, because I told you for inter-head adjustment there is a limit of 2 lakh. For intra-head adjustment there is no limit, just like 2 lakh rupees. Mr. A can claim set off of loss of rupees 8 lakh during the assessment year 21-22 from its income from house property, if any, and the balance has to be carried forward to assessment year 2023. Right? Next question. Question number 55. The details of income of loss or Mr. Kumar for the assessment at 21-22 are as follows. Income from salary computed 5,20,000 rupees. Loss from self-occupied house property is 95,000. Loss from let house property 2,25,000. Loss from specified business under section 35 AD. Loss from medical business, long-term capital gain, and income from other sources is 80,000. What shall be the gross total income of Mr. Kumar for the assessment at 21-20? First, let us go. Advice. Income from salary, there is no loss. Loss from self-occupied house property, let out house property, that is 95 plus 2,25,000. 95,000 plus 2,25,000, 3,20,000 rupees. So against the salary income, but to the extent of only 2 lakh rupees. Maximum 2 lakh will be set off, because in case of inter-head adjustment there is a limit of 2 lakh rupees. So 5,20,000 income is there, so we can set off the loss of 2 lakh rupees. Hence the income will be 5,20,000 minus 2 lakh, so it will come to 3,20,000. Okay, then loss from specified business under section 35 AD. Now if you remember, 35 AD losses can be set off only against the income of 35 AD. So this loss cannot be set off, this loss will be carried forward. Loss from medical business of 1,20,000, and there is a long-term capital gain of 1,60,000. So yes, we can very well adjust this 1,60,000 minus 1,20,000. So this will be what? 40,000 will be the income, and then 80,000. 80,000. Sorry, 3,20,000 plus 40,000 plus 80,000. So gross total income will comes to 4,40,000. I hope you are getting this right. Again and again I am telling you, if you have any doubt, you can write in the comment box. I will clear your doubt. Please, if you are getting a benefit from it, please share with your friends so that they also get the benefit of the same. Question number 56. Srivastav, age 72 years, paid a medical insurance premium of 52,000 by check and 4,000 by cash during May 2020 under a medical insurance scheme of a general insurance corporation. The above sum was paid for insurance of his own health. He would be entitled to a deduction under section 80D of the sum of how much? 72 years. Maximum limit for the senior citizen is how much? 50,000 rupees is the maximum limit. So 50,000 will be allowed as deduction to him, right? Next, 57. The rent of 5,000 per month. His total income 2,80,000. That is the gross total income as reduced by deduction under chapter 6A, except GG. He is also in receipt of HRA. He is also in receipt of HRA. He would be eligible for a deduction section 80 GG of an amount. Answer will be nil. Why? If you are getting the benefit of HRA, then you are not eligible for a benefit of what? 80 GG. Okay. If you want to take a benefit of 80 GG, then you are not eligible for what? HRA. Okay. Question number 58. Life insurance premium of 80,000 during the previous year of a policy of 1 lakh taken on 1/4/2017. 1/4/2017. He has taken the policy. How much will be the deduction allowed to him? How much will be the deduction? So if you remember, there is a percentage, 10% of the sum assured or the premium amount, whichever is lower. 10% of 1 lakh, that is 10,000 rupees, or the premium amount, whichever is less, will be allowed. So 10,000 is the amount. Option is D. shall be allowed as deduction of 10,000 under section 80C. Question number 59. In respect of a loan of rupees 40 lakhs sanctioned by the SBI in April 2020 for purchase of residential house intended for self-occupation, compute the interest deduction allowable under the provision of the Act for the assessment year 21-22, assuming that the disbursement was made on 1st of June 2020 at the rate of 8% per annum. The loan sanction was 80% of the stamp duty value of the property. Loan sanction was 80% of the stamp duty value of the property. So 40 lakh is a sanction loan. 40 lakh divided by 80%. How much it will come to? It will come to 50 lakhs. 40 lakh multiply by 8% into 9 divided by 12, if you will count, it will come to 2,40,000 rupees. 40,000 rupees, right? So how much deduction you will get? Okay, now that purpose you must remember section 80A. Okay, now what that section states, stamp duty value of the property should be up to 45 lakhs. As per the given information, it is sanctioned amount is 80% of the stamp duty value. So we have to count the reverse calculation. 40 lakhs divided by 80%, 50 lakh. That means stamp duty value is 50 lakh. So this person is not eligible for the deduction under 80A. Okay. So if he is not eligible for that, then only deduction under section 24 benefit will be available. And if you remember, deduction under section 24 is allowed only up to rupees 2 lakh, not more than that. Okay, so D option is the correct one. 2 lakh under section 24. Question number 60. The maximum amount which can be donated in cash for claiming the deduction under section 80G in the previous year 2021 is what? 2,000 rupees. You can give the donation only up to rupees 2,000 in cash. If you donate more than 2,000 rupees, then the full amount is not allowed as deduction to you. Okay. Question number 61. Rajan, a resident Indian, has incurred 15,000 for a medical treatment of his dependent brother. Medical treatment of his dependent brother, who is a person with severe disability and has deposited 20,000 with the LIC for his maintenance. For assessment year 21-22, Rajan would be eligible for deduction under section 80DD to an amount equal to what? 80DD, 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 80DD. If you remember this section, 80DD. Okay. Taking care of handicap dependent relative. Okay, so here we are saying that person is with the severe disability. Okay, and he is also dependent on him. So here there is a flat deduction of 1,25,000 rupees in case of what? Severe disability. So let us check whether the option is there or not. Yes, option is there, 25,000. Sir, what if there is no severe disability? Then the deduction is restricted up to 75,000, and this is a flat deduction if you remember. Okay, this is a flat deduction if you remember. Only thing you have to do is you have to deposit some of the amount in the LIC, and you have to take care of that particular person. Okay, then only you are eligible for this. They are not going to see how much expenditure you have done or whatever may be the things that you did. Okay, only thing is, the first thing is you have to submit the certificate of the disability with your return of income. Okay, that disability certificate is of the government hospital. And second thing is you have to deposit some of the money in LIC. Okay, so since the conditions are satisfied, so he will be getting a deduction of 1,25,000 rupees flat. Okay. Next one, 62. Mr. Shiva made a donation of 50,000 to PM Cares Fund and 20,000 to Rajiv Gandhi Foundation by check. PM Cares Fund of 50,000 and 20,000 Rajiv Gandhi Foundation by check. He made a cash donation of 10,000 to a public charitable trust. The deduction allowed to him in the section 80G for the assessment 21-22 would be what? Okay. Now under section 80G, there are two type of categories. One is unlimited category and the one is limited category. Limited category means the amount of donation deduction is restricted, okay, up to the 15% of the AGTI. Adjust says go to gross total income. Okay, that we have to see. Okay, and in unlimited category you can donate any number of the amount. Okay, you can donate lakhs of rupees, but in that also there are two categories. One is 50% category, another 100% category. Okay, there are many names in that category, but as far as this question is concerned, the PM cash fund falls under that category of 100 percentage. Okay, there is no such kind of thing called as Rajiv Gandhi Foundation. Okay, Rajiv Gandhi Foundation is not there. Second thing, the donation made in cash more than rupees 2000 is not allowed as deduction. So Mr. Shiva will be eligible only for the donation of 50,000 to the PM cash fund. Okay, wait. To the public charitable trust, a cash donation of 50,000 rupees, 10,000 rupees. So yes, it will be allowed. No, that particular donation will not be allowed. But yes, Rajiv Gandhi Foundation, sorry. Rajiv Gandhi Foundation is there in 50% category. Okay, Rajiv Gandhi Foundation. So 50,000 will be that. And for Rajiv Gandhi Foundation, 50% will be allowed. Take 20,000 multiplied by 50%, 20,000 multiplied by 50% will be 10,000. Total donation of 60,000 will be allowed to. 60,000 is the correct answer. 63. Number 63. Mr. Ritvik has purchased his first house in Gwalior for self-occupation on 5th of April 2020 for rupees 45 lakhs, stamp duty value being the same. This is only the 45 lakhs is the stamp duty value. With the bank loan sanction on 30th March 2020, disbursed on 3rd of April 2020. Give interest of 3.8 lakh during the previous year 2021. What is the tax treatment of interest paid by him? So 3 lakh 80,000 and 80 states that you are allowed for a maximum deduction of 1,50,000 of interest on loan. The amount is up to rupees 45 lakhs stamp duty value. Okay. 1,50,000 rupees. 3,80,000 is interest amount, out of which 2 lakh will be allowed under deduction under section 34. And balancing amount 1,80,000. That is interest of rupees 2 lakh allowable under section 24 and 1.5 lakh allowable under section 80 EEA. Let us move to the next question. Question number 64. Anuj is a businessman whose total income after allowing deduction under chapter 6A except under section 80 GG for assessment at 21-22 is 5,95,000. He does not own any house property and is staying in a rented accommodation in Patna for a monthly rent of 9,000. Deduction under 80 GG for assessment at 21-22 is what? If you remember this, so deduction will be 50% of the adjusted cost to the income or 5,000 per month rent paid minus cost to income where is low. Total income minus all the deduction under chapter 6 except 80. Okay, so information was 5,95,000 will do 5,95,000 into 15% will end up with 39,250. 5,000 is for 1 month, so 5,000 into 12 will be getting 60,000 rupees. Rent paid is 9,000 into 12. 8,000 rupees. 1,000 minus 59,500 will get 48,500. Whichever is lower, it will be 40,500. This is the correct option, right? Next, question number 65. Charge for assessment year 2022 is 2 lakhs. Surcharge payable at the rate of. Surcharge payable at the rate of. If you remember, the surcharge rate for the individual up to 50 lakh, there is no surcharge. And if your income is more than 50 lakh rupees, okay, but to this untold, okay. Next, 66. Unexhausted basic exemption limit for a resident individual can be adjusted against. Unexhausted. What is unexhausted basic exemption limit? First, understand. Let's suppose my long-term capital gain income is 1,20,000 rupees. Other income, which is chargeable at per slab rates, is 1,80,000 rupees. So now you know that long-term capital gain income is charged at a special rate. Either it will be a 20% rate or it will be a 10% rate. Okay, but other income is charged as per the slab rate. Now, assuming that for me the basic limit is 50,000, but my income, other income is only 1,80,000. So 2,50,000 minus 1,80,000 will get 70,000 rupees. Now 70,000 will be called as unexhausted basic exemption limit. And the basic exemption limit is not fully exhausted by your income. So with respect to this 70,000, what you will get a benefit of that 70,000 over here. Unexhausted basic exemption limit benefit you will get over here. So 1,20,000 minus 70,000, 50,000 will only be taxable. Okay, and that benefit is covered for long-term capital gain under 112A, under section 112, and in fact under section short-term capital gain under section 311A also. Okay. So long-term capital gain taxable at 20% under 112, short-term capital gain taxable under 10% under section 311A. Both A and B casual taxable income, casual never ever. Winning income, there is no exemption. So option C is the correct answer. Option C, both A and B. Right. Next, 67. Unexhausted basic exemption limit of a non-resident individual can be adjusted against. Non-resident individual. Unexhausted basic exemption limit benefit is available only to the residents. Answer is either A or B. Okay. Next, 68. During the previous year, Mr. Ranjit has short-term capital gain of 95 lakhs taxable under section 311A and long-term capital gain of 110 lakhs taxable under section 112. Business income of 90 lakhs. Which of the following statement is correct? Which of the following statement is correct? Business income is 90 lakhs. Business income is 90 lakh rupees. Okay. And short-term capital gain and long-term capital gain income is 110 lakhs and 95 lakh rupees. Which of the income is correct? For that you must have the knowledge of surcharges. Okay, you must have the knowledge of surcharge. Okay, if you remember this, surcharge of 15%, you will see the total income 95 plus 110 plus 90. A total of it 95 plus 110 plus 90. So income exceeding is to 95 lakhs. Okay, but business income is only 25 lakh rupees, 20 lakh rupees, sorry. So only this surcharge rate will be applicable. That is surcharge at the rate of 15% available on the total income on the 2.95 crore. Last case will come under the last case. Okay. Next. Question number 9. Which of the following statement is not true with respect to assessment at 21-22? Not true. They are asking not true. Not true. That means we have to find out the false. With respect to assessment at 21-22, no exemption under section 80 would be available to resident senior citizen. Answer is true. Why? Because for senior citizen there is section called that is why exemption under section 80 TTA would be available to resident senior citizen. Answer is true. Share of profit will not be exempt in the hands of partner if the firm claims exemption of income under section 10AA. No, this is not correct. It's false. Okay, not true. They ask not true. Not true, that means false. False, that means they read the statement. Okay. Share of profit received by a partner from a partnership firm is in any case it is exempt. The section 10(2)(a) in the hands of partner. Okay. Question number 70. Last question for the today's discussion. Okay. Gross total income of Arpita for previous year 2021 6 lakh. She had taken a loan of rupees 7,20,000 in the financial year 17-18 from a bank for her husband who is pursuing MBA course from IIM Kolkata. On 2nd of April 2020, she paid the first installment of a loan of 45,000 and interest of 65,000. Computer total income. Okay. Now, if you remember section 80E, 80E stands for education. Interest on loan is allowed as reduction. Interest on loan is allowed as reduction. Education loan for maximum 8 years. There is no restriction on the interest amount, and the loan can be taken for self, spouse, or the children's, or for the children for whom the assessee is a guardian. Okay, and any course after the secondary, that is SSC examination, loan can be taken for any course after the senior secondary examination. Okay, so here in this case, MBA course, loan is taken for the MBA course, and that is in India. Okay, and the loan is taken for her husband, spouse. Each and every condition is satisfied. That means interest amount will be allowed as a deduction. 7,20,000 minus 65,000 interest allowed as a deduction. So 7,20,000 minus 65,000. So final answer will be 6,05,000. And interest of 65,000. 7,20,000 minus 65. 6,55,000 will be the amount. Okay, taken a loan of 7,20,000. Loan of 7,20,000. Loan of 7,20,000. Income is not 7,20,000. Income is 6 lakh. 6 lakh minus 65,000. You will come 5,000. I hope you cleared with this concept. You like this. Okay. If you have any query with respect to this, if you have any doubt with respect to this, you can write comment box. Share with maximum number of students as much as you can. Okay, so that as you are taking the benefit, they will also take it. Okay, thank you. Take care. Bye bye.